Hello, everybody. It's Friday, May 22nd, and we're heading into a 3-day weekend. This video is about interest rates. Some very important things have been happening very recently. I finally was able to pick up Barron's today, Treasuries tumble, and then, of course, yesterday was a big deal. Some people that follow the financial markets will know about it. A lot of my viewers probably won't know about it, but it's serious, very serious, and I'm going to talk about it because it's what I've been predicting, and it's starting to unfold and happen. Got up early this morning and watched some Squawk Box. I got a bunch of DVDs mailed off yesterday. I'm sorry. First California trip, I wasn't able to get them printed up. Last California trip I'm back in town. Got everything done, mailed the ones off to Canada and everything. So, sorry about that. Some people, become a little impatient, and I'm sorry about that. Anyway, mailed them all off. So, interest rates. Some very interesting comments. I'm going to read through my notes today because I took quite a few notes on what's going on. As everybody knows that's been watching my videos for a while, I predicted there's going to be some deflation in some asset classes, but then eventually as the dollar becomes more and more devalued, interest rates will go up, and then they will go up and exceed almost everybody's expectations and surprise people. So there's trading opportunities there, but most of all, it's going to lead us into this depression, which would be happening right now if it wasn't for massive government intervention. Anyway, there's a big, huge bond fund called PIMCO, and there's a guy called Mohammed El-Arian that is a CEO, and then Bill Gross, who used to, he's also one of the huge players there. And I was watching Mohammed El-Arian this morning on Squawk Box, and they talk rationally about it, but you can tell that there's an unknown there. And he mentioned even Tim Geithner didn't want to talk about the long term. But some of these quotes, you might have seen the UK, and I appreciate all my viewers over there in the UK, that the UK, Moody's is seriously thinking about lowering their debt rating from AAA, which is the highest rating, to a lower debt rating. And also that sent jitters through the whole world financial markets as far as the credit worthiness also of the United States. Very interesting to hear Bill Gross quote say that it's just a matter of time before the United States gets downgraded. We're talking about people that manage billions and billions and billions and billions and billions in money in bond funds. So U.S. sovereign risk was sovereign risk, meaning our country, the United States, and obviously the UK is going through this, and they're in a worse situation than we are. Gordon Brown doesn't seem to be too popular. Arnold doesn't seem to be too popular. These politicians and those people that elected them have run up massive deficits. Whether you voted for Bush or Obama, there's been massive deficits run up, and this goes back to the Constitution, getting away from sound money, and this is going to lead to economic collapse. It's going to happen for sure, just a question of when. But some important signs came out. Let's see. El-Arian, it was interesting to listen to him. That it's a big issue right now, the public balance sheet and long-term policy objectives. He was talking about those things. Tim Geithner's been in the news. There's so much going on, it's hard to really talk about even a tenth of it, but interest rates is the number one issue in my mind right now, especially yesterday. Well, so the government, let's see. One thing, Art Cashin, I've always enjoyed his salty commentaries, but he said that yesterday, Art Cashin, number 805, down there on the floor of the New York Stock Exchange, that things got very scary yesterday. People, international investors, people that buy up long-term debt of the United States and England, are starting to get nervous and feel that, hey, this could be unsustainable, which of course it is. It's just that people don't like to think about about the unthinkable. They just won't think about it. But with these kind of massive, tremendous government spending situations, with massive Federal Reserve intervention, with massive bailouts done by politicians that aren't finance people, and finance people that aren't constitutionalists, we're getting so far away from the Constitution that the collapse of the United States economy is absolutely 100% de facto inevitable. And a big sign of this was a movement in interest rates. A 30-year bond, which has lost about 10% of its value just in the last few weeks, was yielding 4.38 this morning, and then ended up the day at 4.45%. I predict it's going to go past 5, 6, 7, and we'll see the time when it'll go past 10%. Now, a lot of people don't even believe that, but even as we go into a depression, people will not trust the U.S. government, and they will not lend them money for 30 years at 4, 5, 6, 7, 8, 9, or even 10%. And we're going to watch this unfold in the next 24 months. Be very interesting, huge trades, and Art was also talking about that. This is a quote from Art Cash, and the selling can turn violent. I just had to write this down because this will be a thing. As a year from now, we'll look back and say, "Oh my gosh, the 5-year was trading at 2.16, the 10-year 3.33." Short-term rates for those of you that aren't finance folks: 1 month 1.11%, 3 month 0.17. These interest rates, short-termers, are so low because people are afraid, they're scared, and they're just parking their money. They don't want to put it in the stock market. They don't want to lend it to the U.S. government long-term, which is the bond market. They're just keeping it what's supposed to be short-term interest rates. And everybody that takes finance courses and economics courses are always taught that interest rates to the U.S. government are the riskless rates, that there's no risk. But now the internet, the whole world is starting to say, whoa, obviously there's risk in the UK running tremendous budget deficits, and by association and also by implication, also by the horrible fiscal and monetary policies here in our country and political policies, people are questioning the soundness of the United States financial system. And you'll see this come more and more into question in the weeks and months ahead. So the main message that I want to deliver, Man of Truth, is I've studied the financial markets for 30 years. And if you don't understand politics, the U.S. Constitution, and the Federal Reserve, central banking, and where all this is headed, then this will hit people by surprise. But to those of my viewers, it's not going to be a surprise because I'm telling you what's going to happen before it happens. It's not an arrogant thing. It's taken a lot of study and a study of non-traditional sources, and being willing to predict things that the people that have made a lot of money consider unpredictable. I noticed that the head of AIG, that huge insurance company, he was just in there for 7 or 9 months. He's out. He decided to abdicate that position running AIG. And so the storms have started. They're in earnest. They're huge. The financial collapse is huge, but it's going to get worse. Interest rates will go up. As I've said before, when the Federal Reserve is buying long-term instruments and these bank bailouts are happening, we're living in an artificial environment. Long-term, Tim will talk about what's going to happen, but people are clearly worried about the long-term viability of the United States of America, and rightly so. So this video, as people look back at it, once again, the 30-year bond, which is lending money to the United States government, lending money to the U.S. government, was 4.38% of the open. The 10-year bond, let's remember this, the 10-year lending money to the United States government right now, May 22nd, 2009, 3.33%. Within 2 years, you'll see that double. Within 3 years, triple past 10%. And the time will come when people, investors, will not lend money to the United States government at any rate at all. So I'm going to obviously keep covering this as long as we have free internet. Once again, I'm grateful to YouTube and Google, the owners of YouTube, for this. But I'm going back to my Harvard Business School reunion next week. That'll be interesting to talk to my friends that are money managers, venture capitalists, in all kinds of positions, and they'll have fun talking to me. So I'm very grateful that I'm able to go there. So people have donated. I might even put up the donate money, so I have a little cab fare to get around Boston. And then I'm thinking of having MOT get-together right at Harvard Square Monday night. I think that's around June 1st. I'll double check my calendar and then I'll do a video on that. But Harvard Square, I will be in Boston, right there in Cambridge, having completed my reunion. It should be very interesting, and I'd love to meet all of you. If you want to be some of my videos, I'll bring my camera and we can film some clips of your opinions if you want to be on my channel. Very serious drop in interest rates. And then since I made my gold video, you might have noticed gold, I think, moved $30 an ounce. It'll move to, like I said, 1,000, 1,200, 1,500, and 2,000. All this stuff will unfold. Very interesting times. I'm eating a lot more raw foods, getting prepared that way. But right now, interest rates basically changed dramatically in the last few days, changed dramatically yesterday. Investors around the world were scared about it. And they will get even more scared as the next few weeks and months unfold. We're not going to recover. This is false. We're throwing paper money and fiat money at this broken economy, and it's propping it up, which will make the inevitable collapse so much the worse. Ciao.